Marcus makes $42,000 a year. He works hard. He pays his bills. He has a checking account at HYSA that he has had since he was 19 years old. Last year, Marcus paid his bank $380. Not for a loan. Not for a mortgage. Not for any service he chose. Just to exist as a customer. Daniel makes $42,000 a year too. Same city. Same job title. Same bank. Daniel paid his bank $0 last year. Same institution. Same fees on paper. Completely different outcome. And the difference between Marcus and Daniel is not luck. It is not connections. It is not even income. It is one number. And most people never find out what that number is. Here is something the banking industry does not advertise. Every account you open gets scored. Banks run what they call a profitability model, an internal system that calculates whether you, as a customer, are making them money or costing them money. And if your average monthly balance falls below roughly $2,000 to $5,000, which is most Americans, you are flagged. Not as a valuable customer, as a liability. And the bank's response to an unprofitable account is not to lose money on you forever. It is to charge fees until the math works in their favor. Every overdraft, every minimum balance miss, every out-of-network ATM. Those are not accidents in the pricing structure. Those are the product. Below $10,000 in total deposits, you are not the customer. You are the revenue source. Now back to Marcus and Daniel. Marcus has about $800 sitting in his checking account on any given day. When his rent clears every first of the month, that number drops to $200. His bank sees that dip and charges him a $12 monthly maintenance fee. Every month, without fail, Marcus calls once. Gets told it is in the terms and conditions. Stops calling. $380 later, that is his year. Daniel figured something out that Marcus did not. HYSA waives that $12 fee if you maintain a $1,500 minimum daily balance. Or set up direct deposit. That is it. That is the entire secret. It is not hidden exactly. It is buried in fine print that nobody reads, on a page that nobody visits, in language designed to be ignored. Daniel set up direct deposit 2 years ago. Has paid 0 fees since. The same 2 people. The same bank. One of them is funding the other's free wealth management and does not know it. But here is where it gets more interesting. Because fee waivers are just the floor. That is the minimum viable move. The real shift, the one that changes your entire relationship with the bank, starts at $10,000. Above $10,000 in total deposits, something quietly unlocks. Banks have what they call relationship pricing, internal rate sheets that are completely different from what is posted publicly. Better savings rates, better CD terms, better rates on personal loans. Available to you. If you ask. The operative phrase is if you ask. They will not call you. They will not email you. The pricing exists, and it stays invisible to everyone who does not know to request it. And above $25,000, something else changes. Call center leverage. Below that threshold, if you call to dispute a fee, your odds of getting it reversed are low. You are a low-value account. The math does not favor the reversal. Above $25,000, a bank representative can see your total relationship value on screen. And the calculation shifts entirely. Research from J.D. Power found that customers with higher deposit balances get fee reversals at a significantly higher rate, not because banks are nicer to wealthy people, but because losing a $50,000 relationship to a competitor costs far more than waiving a $35 fee. That is leverage. Real, usable leverage. And it is available to you at $25,000 in a way it simply is not at $2,500. Now, let us talk about the tier most people never reach, but need to understand anyway. $250,000 in investable assets. This is the threshold the banking industry calls mass affluent. And above it, everything changes. You get a private banker. One person. Direct number. Answers the phone. Someone who proactively calls you when your mortgage could be refinanced. When there is a tax optimization window. When an investor